Happy Sunday, guys. Hopefully you've all had a great weekend. As it is Sunday, we are going to keep this daily cryptocurrency market update short and sweet. But really, I want to deliver a message to you guys about just how lucky you are to be interested in this space at the present time. We had some big news last week in regards to BlackRock and their ETF. Now, we've looked historically, and everyone's kind of caught up onto this in regards to what happens to whether it be the S&P, with the launch of an ETF. The Spider was initially the first one in 1993 or 4, I believe. And then, of course, gold with their ETF that BlackRock Spider actually produced in 2004. We're going to look at a tweet that I really think will make people realize just how early we are in regards to Bitcoin and crypto and digital assets generally. And I want to kind of spend the bulk of the video looking at that. We're going to look at some charts. We'll look at a little bit of macro stuff. And then, of course, the week ahead. Look at a comment from Raul Powell, who just my personal take on Raul, I don't think he is a very good, perhaps, trader. Or I'm not sure I think his insights are the best. But he has a brilliant platform, Real Vision, actually, where they do have a lot of great guests on who perhaps know a little bit more what they're talking about. And I think he's done a rather good job with Real Vision. But we're going to be looking at a tweet from him to start things off. And then we're going to get into a tweet from Adam Cochran that essentially looks at BlackRock, what they did for gold, and moving towards the future, what perhaps they're going to do for digital assets. And actually, at the end of his tweet, he leaves a comment where he says, look, just like what happened with gold, where you had these guys go off into central banks and promote it, and it became like a staple in a portfolio. Similar things are going to happen with crypto. And actually, this is happening at a time where you've got de-dollarization, which Yellen came out and said, and you've got a debt market that nobody really wants anymore as we see people move away from it. The US debt market and debt markets are in the $300 trillion. There's a lot of money that can flow into crypto and assets. And of course, we'll round everything off with some charts the week ahead, etc., etc. So let's just start off with this tweet from Raul. It seems pretty obvious to me that Gensler is giving BlackRock the BTC ETF the nod, and also got the Prometheum circus going to prove that he isn't stopping crypto entirely. It's all politics, and in the end, he throws a bone to Wall Street so he can suggest they are more trusted. This kind of sums up exactly what I think is going on. And we'll go ahead and give that a like. Good good summary from Raul, albeit brief. Again, nothing against Raul personally. I've just, I have looked at a lot of what he's said over years now, and it's rarely on the right side of things unless we're in a raging bull market and he's calling long. Anyway, I think this is a very good summary. Gensler very much giving BlackRock, who have filed for 575 ETFs, and they've only ever had one not approved. So there's a very good likelihood that BlackRock is going to get approved for this ETF. You had Brad, of course. We looked at this a little bit yesterday. We'll be doing a separate video on Ripple and XRP and the kind of payment blockchains, but that'll probably come in the week ahead. And the Prometheum thing, we actually did an entire video on. You'll see it with the Men in Black reference on the thumbnail. The Prometheum thing, Prometheum is a complete insider that's likely working for the regulators. They offer no crypto products whatsoever. They're currently not even operational, yet they've been the first people to get a license to essentially trade crypto. And they're kind of, he came out and said, okay, we think all layer ones are securities. They were actually going to launch a layer one themselves. They actually got funded in a very interesting way. And the Kaplan family are interesting, but this is a total insider, and ultimately it's very timely of BlackRock's ETF. Now I want to move on to this tweet from Adam. I thought this was brilliant, and actually this very much sums up what we think is happening, and this is just applicable to Bitcoin, let alone the days to come where I think we have Ethereum ETFs, where we have other alternative layer one ETFs, just like we've seen with GBTC or Grayscale's trusts, or whether it's coin shares or whatever it is. Similar things going to come with ETFs, and it's a very bright future the cryptocurrency market has ahead of it. But just focusing on BlackRock and gold, and applying that perhaps to what's going on with Bitcoin right now, let's look at this tweet. Okay, one last bullish BlackRock tweet to round off the weekend. People don't realize that BlackRock really made the gold market what it's known as today. Pre-BlackRock, it was $1 trillion in market cap. Now it's $13 trillion. So how did they do it? This is a pretty interesting diagram showing you how gold's market cap is derived. You've got central banks that hold 17% of it. You've got bars, coins, and gold ETFs. Which is around about 22%. And then you've got jewelry, which they reckon is at 46%. That might be quite a high estimate. And then you've got proven reserves. I think that's 52,000 tons. And obviously there's a lot more gold in circulation than actual proven reserves to back that, which is a whole different debate that we can look at maybe at another time. So BlackRock has an army of advisors around the world who receive commission for pushing their products. And while they've got a lot of brands for their fund, they are most known for iShares, which offers 3 of the 5 largest gold ETFs in the world. BlackRock has tools to let its advisors earn 3% advisory fees on the products they sell, as well as to add on custom advisory fees. Depending on the jurisdiction of offering and advisors, there can also be trailing fees. Very interesting. But in most places, the fees are for new products sold, and due to a various regulation, can be more lucrative for alternative assets than standard shares. But when BlackRock introduced their gold product, they began to add it to their model portfolio for advisors. One big part of a portfolio is diversity, certainly when you're talking about asset managers across the board. And you can see actually here they look to add, rather timely gold when they launched the ETF to their kind of model portfolio. Advisors eager to push the products and get commission on new assets class began to tell boomers that gold was the perfect component to round out a portfolio and hedge against inflation and other risks. This led to the boom in gold investment demand. And you can see here, this is as things sort of started. While much of the global demand for gold is still purpose-driven, jewelry and tech, this push grew the investment sector of demand to almost 25%, which led to a second-order effect of increasing the amount of gold central banks were buying. Very interesting. Because people valued gold, central banks in turn valued gold and rapidly increased demand for it, all driven from this push. Gold had exchange-traded products prior to this. In fact, as far back as 1961, I didn't know that, there was a gold ETF in Canada. I did not know there was as far back. I knew about 2004. And State Street launched their Spider Gold ETF, just like the Spider was the first S&P ETF in 2004, which is the largest of all gold ETFs. But BlackRock, through its army of advisors, pushed the narrative that gave gold broader legitimacy in portfolios. Its network told millions of users that you needed gold to have a well-balanced financial safety net. After doing this for 2 decades, we now find that young wealth managers and economists who have climbed to seats in central banks and sovereign wealth funds view gold as a portfolio safety narrative as a no-brainer. The same will hold true with crypto. I agree with this 100%. We have existing non-US ETFs and US ETPs, so exchange-traded products, very different like your futures. BlackRock will arm advisors to educate millions of consumers, allocating X% of their portfolio to crypto and change the narrative entirely. So we have done a few videos now where we've looked at global wealth, and we only need a very small amount to flow into the crypto space, and this becomes a 10, 15, $20 trillion asset class. That's where you're heading, ladies and gentlemen. Very, very, very exciting time to be in the crypto space. It may not always seem like it, certainly when there's low interest and lack of volume. The last of this tweet, which I found interesting, then as the dollar declines and new generations of wealth managers, bankers, and economists who grew up in the digital era ascend to the chairs of central banks, where do you think they will turn for reserves? What will they invest the future of their country in? Very, very interesting, guys. This It's almost too good to be true. It's like divine intervention, I guess, that Bitcoin came around when it did. Right as the cracks were showing in 2008 and the system, the old horse was dying, it was getting weak, they provide a new horse in the race. Ultimately, I think at some point to take over from the old horse. That's my kind of views on it all. I think it's very interesting. I think we've always known as a channel, and we've done very well from it. I've done very well from it personally as an investor. What's actually going on here? This is absolutely a tech revolution. It's social revolution as well, actually, in many regards. And ultimately, you are looking at the operating systems of the world in these layer ones to come, and the actual new way which value will be transacted. Wells Fargo did a great article on it that I can no longer find, where it spoke about the internet of information, which we're currently communicating over, and now the internet of value, which is here. And they likened it to being as significant as something like electricity. So this is the future to come, guys. Again, very interesting that this is all happening around a time when the old system, the debt-based dollar system, is never been under so much scrutiny. You know, the biggest mistake the US made was to sanction Russia and to boycott them from the dollar system. A global reserve currency has to be agnostic. It has to be apolitical. Because the problem is the second you did that, everyone else went, well, hang on. That can happen to us too. Why is our entire country levered up with this? And we've since seen China move away from it, of course, Russia. The BRICS nations are doing a lot. We've had France that are looking to move away from it, which is more close to home. UK still not so much because very much in cahoots with one another. But, you know, this is coming. And it's very interesting that Bitcoin and crypto came about at this kind of a time. And if you look at debt as an asset, it's in the $300 trillion, probably more. If you look at derivatives, it's in the $600 trillion. Crypto today, I think it's just sat at $1 trillion market cap, guys. Yeah. You are early. This is an uptrend to us. We've called pretty much every single market right this year, barring some altcoins which went on and put in marginally lower lows, but we do think the tides will turn for them. Called Bitcoin very right, and ultimately we're expecting a lot of continuation. It's very interesting. Again, you know, the US debt hits 32 trillion, up $572 billion since the debt ceiling was suspended, which wasn't that long ago. This is the death spiral for debt, guys, that we're witnessing, and it's accelerating. The more debt you have, the bigger the mass of the snowball, the faster it rolls down the hill. Talking about the Treasury drains liquidity from the markets, debt doesn't matter until it does, and now it does. Again, we've been watching. Yellen and what she's doing is interesting because she's obviously dumped loads of cash reserves from the Treasury in order to get the debt ceiling raised. She couldn't exactly go to them and say, "Oh, we need money," when she's got a load of money in the reserves, one a low level. People were saying, "Oh, this is going to be a 2008, 2009 all over again." But look at the sort of repo market, which caused that crisis back then compared to now. They have drastically reduced the reserve repo market. However, there's a lot of money in there. It was 2.4 trillion when we were looking at it. It's now around about 2 trillion. And this seems to be the best way for them to do it. So far, the Treasury approach of raising money on the shortest and most expensive part of the curve is working well for financial sector liquidity. Reserve repos down bigly. If they continue to focus on the short-term debt financing of this magnitude, it should be negative for reserve repo, flattish for banks, reserve repos, and positive for bank deposits. A metric to watch for difference is how far bank deposits are moving into the money markets. We've seen all this. It's very interesting what's going on right now. Onto Bitcoin, onto generally the markets, guys, which we've spoke about in great detail. You know, and hopefully we're gaining quite a good subscriber base, consistent subscriber base based on a lot of the calls we've made. You know, this is played out beautifully. So is the S&P, so is Apple. Microsoft, we've said, is basically a barometer for what's to come for Bitcoin. You know, you're here right now for Bitcoin. This is the reality, guys, I think. We see upside for stock markets. We've been confirmed on the macro with inflation. And, of course, not just inflation, but them actually look to pause rates. We've done lots of looking at what happens historically with a pause. so on and so forth. I'm rabbiting on now, guys. This could be the de-dollarization that you could see. Somebody did say, well, how can you have a double right shoulder? There's such thing as complex head and shoulders. You'll see them play out time and time again. In fact, it's kind of rare that you get a perfect head and shoulders. I mean, this already wouldn't really classify as a perfect head and shoulders with this right shoulder and how high it's got. But this isn't going to be a TA lesson. So the dollar's still getting a bit of a bid right now, but I think that's got a lot to do with the yields. Yields are interesting. This is interesting. Gone up a little bit higher than I'd have thought, but it's probably got a lot to do with the issues that we have in the debt markets. It's going to be very interesting to see how this all plays out. Very quickly now onto the week ahead. I was going to read a tweet from Mark Cuban where he talks about the former SEC enforcement head, Jay Clayton, unknowingly threw SEC under the bus and explained why the SEC needs to change the registrations rules for digital assets like crypto. Actually, the World Economic Forum also agree with them. Interesting things coming out of the World Economic Forum recently. Just a quick look at the week ahead, guys. Monday, no US markets open, but I think other markets will be, so going to be interesting. US housing starts, going to be also interesting, expected to fall. We think it could rise. We could see a rise in housing starts in the near future, believe it or not. UK CPI, prices to rise 8.4% year on year from 8.7. Pretty sticky. UK is just, I mean, this country is just, words can't even describe how bad it's got. You know, I mean, I don't want to go down that rabbit hole, but everything about the UK is just a complete disaster. It's a complete joke. And actually, the thing that really shocks me the most is that more people aren't outraged about this and doing something about it, and I think they should be. But anyway, so Bank of England rate decision also expected to rise. This could feed into a little bit of dollar weakness. US initial jobless claims, Eurozone consumer confidence. We got Powell's speech on Thursday, which is going to be very interesting. Markets will move off this. US existing home sales, US EI crude oil, and then we've got Japanese CPI. Japan is not doing well in terms of their currency, but may do in terms of their stock market. That's perhaps for another video. UK real retail sales, German PMIs, Eurozone PMIs, UK PMIs, and US manufacturing and services PMI. Going to be very, very interesting. We'll see what takes place next week, but we'll keep you up to date, of course, on the channel. Stay tuned for more videos. We've got lots of interesting things coming up. We're going to look at debt in more detail and actually why this is a big opportunity for the crypto space. And of course, everything across the board as we move into the week going ahead. Also, altcoins we're going to be looking at a lot more. And on that note, I'm going to love and leave you. Have a good Sunday, guys. Catch you all in the next YouTube video. Thanks a lot for watching.